With the pair trading strategy, the market blaster trades two instruments at a time. It will short the one symbol and go long on the second symbol, hedging against each other. This is not a full hedge because both symbols still move in the same direction, although the movement is limited. This is achieved with instruments that are correlated in the market. This market correlation with selected instruments will protect one position against the other position in pair trading, limiting the distance between positions and taking advantage of the market inefficiency in the correlation. So, market blaster must be operated with symbols that represent this in the market. The ideal correlation for symbols would occur on a daily chart and contains less correlation in the intraday chart. With less intraday correlation, market blaster can take advantage of the intraday inefficiency in the traded symbols. The grid trading strategy has two sides, the long grid and the short grid. Firstly, market blaster will check how much movement there is a daily candlestick with a short grid. You can then split this daily candlestick into 1, 3, 4, or 5 grid elements. Because of this split, whenever the price goes up, it will place a short, and should the price go down, it will close the short grid, taking advantage of the intraday movements, creating a grid. To hedge a short grid, you can also turn on the long grid to work the same with the opposite conditions. So, whenever the short grids find themselves in a drawdown, the long grid will start making profits and keep hedging the short grid. Again, the opposite is the same for the long grid. This strategy can also be interpreted in a dynamic hedging key due to its characteristic of being able to generate few operations in long lateral phases. Here I present a basic idea of how to eventually develop an EA expert whose settings vary from currency pair to time frame. But the idea I propose is clear. Time frame 15 minutes or higher. The time frame at 15 minutes and 30 minutes is recommended only on the following currency pairs: Euro to US dollar to Japanese yen, Australian dollar to US dollar. For other currencies a time frame of H1 or higher is recommended. On the daily time frame the strategy can also be managed manually. The reason I give this recommendation is that brokers between 2230 and 2400 hours GMT Berlin extend the spreads a lot. Best time frame is 4H or daily. For the 4-hour or daily time frame I propose also a strategy momentum only based. Technical indicators: moving average 34 period smooth close, moving average 14 period smooth close, or moving averages 21 and 50 is more slow but good and proven solution. Stochastic oscillator 21, 10, 10, close. X indicator period 18, optional. Trading rules: hedging dynamic forex strategy buy moving average 14 period smooth crosses upward, moving average 34 period smoothed. Slow stochastic above 75 level. Sell moving average 14 period smooth crosses downward, moving average 34 period smoothed. Slow stochastic below 25 level. Hedging rules: martingale multiplier 1.5 or 1.4. Max 10 trades for cycle. Examples: US dollar to Japanese yen, pound sterling to US dollar, odd/used 0. 15 minutes time frame: US dollar to Japanese yen, target profit 15 pips. Increase each subsequent trade by 2 pips plus dynamic gap, pips, between buy and sell. H1 time frame: US dollar to Japanese yen, target profit 30 pips. Increase each subsequent trade by 3 pips plus dynamic gap, pips, between buy and sell. H4 target profit 70 pips. Increase each subsequent trade by 5 pips plus dynamic gap, pips, between buy and sell. GBP/used 15 min PT 20 pips. Increase each subsequent trade by 2 pips plus dynamic gap, pips, between buy and sell. Pound sterling to US dollar H1 min PT 40 pips. Increase each subsequent trade by 3 pips plus dynamic gap, pips, between buy and sell. Pound sterling to US dollar H4 min PT 20 80 pips. Increase each subsequent trade by 5 pips plus dynamic gap, pips, between buy and sell. Odd/used 15 min PT 10 pips. Increase each subsequent trade by 2 pips plus dynamic gap, pips, between buy and sell. Australian dollar to US dollar H1 min PT 25 pips. Increase each subsequent trade by 3 pips plus dynamic gap, pips, between buy and sell. Australian dollar to US dollar H4 min PT 50 pips. Increase each subsequent trade by 5 pips plus dynamic gap, pips, between buy and sell. In the pictures: hedging dynamic forex strategy in action. EMA frame H4 and daily. Technical indicators: stochastic oscillator 21, 10, 10, close. X indicator period 18. Rules: stochastic momentum strategy buy stochastic line crosses upward, line red. Sell stochastic line crosses upward, line red. Exit position at opposite cross or with predetermined profit target. See the previous target. Place initial stop loss at the previous swing high/low, but in this strategy the stop loss cannot be used. It is occurring with several different tests. Right now we are also doing a comparative study to apply this strategy to binary options and more. With the pair trading strategy, the market blaster trades two instruments at a time. It will short the one symbol and go long on the second symbol, hedging against each other. This is not a full hedge because both symbols still move